It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Thursday evening, September 22nd, 2016. After such a wild ride from the Fed over the last 2 days, we're ready to wrap up another excellent week in the markets with what should be a range-bound Friday. Crude oil is bearish, trading inside of a bull flag or a bear channel. Even the S&P is bullish and trading inside of a triangle. Gold is bearish and trying to finish the move back to the trading range where the day started. And the euro is bearish after a spiking channel completed its objective and then collapsed off the highs. I got a great newsletter in store for you guys tonight. We got a great plan for tomorrow. It's going to be an early in, early out, most likely a range-bound Friday. We got a great plan for you. Before we jump into that plan, though, don't forget, the only place to watch the full-length version of this nightly newsletter is here on our blog at sidewaysmarkets.com. Not to worry, if you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link. Come over here and join me on the blog at Sideways Markets for the full-length version. And while you're here, don't forget, join the mailing list in the upper left-hand corner, and I'll send you an email every evening that our newsletter goes live. Download the charts below the video to have all the charts ready for your trading session tomorrow. In the upper right-hand corner, don't forget, if you're not a member and you'd like a free pass, come out and join me this week or next in the trade room as a guest. Grab your free pass in the upper right-hand corner. And also, please remember, we have a great trial membership. You can learn more about what it means to be a member, and we get all the frequently asked questions for anybody who's brand new to School of Trade. Get a great free trial here at School of Trade. You'll learn more with me in 1 week on that trial than you will anywhere else on the interwebs. And don't forget, I'm always here standing by to answer all your questions. If you need any assistance along the way, hit me up on the live support button on the right-hand side of the website. All right, guys. Boy, we've had an incredible fourth week of the month. Tomorrow's a Friday, and of course, like every Friday, we know it's going to be early in, early out. Fridays are pretty much always the same. We know that traders are going to be taking bigger risks on Friday. You know, we always talk about this in the trade room. At the end of the day, at the end of the week, at the end of the month, traders become less risk averse, right? They become more risk tolerant because they're usually either trading with house money or they're trying to dig themselves right out of a deep hole they've gotten themselves into. So we know tomorrow, Friday morning, get in early, get out early. And what I mean by early meaning, you'll have the entire London session. We'll be in our chat room for that. And you'll have pretty much half a day in the U.S. session, right? So anything after 11 a.m. Eastern time tomorrow, we're expecting to be a little bit lower volume. With lower volume comes lower liquidity. And, of course, stops don't hold. And it just becomes an overall kind of gambler's market after 11 o'clock on Fridays. Now, there's an exception for every rule, but that's what typically happens, obviously, on Friday. And tomorrow, because we're coming out of such a remarkably active week this week, we expect traders to be settling in here tomorrow morning, London and the U.S. morning session. So get to it early tomorrow, grab that profit out of the market, right, and then hit the exits. Enjoy the weekend. I look forward to seeing you guys tomorrow morning with us in our chat room or, of course, in our trade room. Tomorrow's Friday, the 23rd. We've got a little bit of news here in the London session, 3 o'clock, 3:30, and then 4 a.m., right? So get kind of a peppering there, 3 o'clock, 3:30, and then 4 a.m. That'll wrap up the London session in our chat room tomorrow morning. And then, of course, we go into the U.S. session. We've got some news from Canada. Now, don't forget, right, the biggest export, right, besides curling and hockey coming out of Canada, and amazing people, is, of course, right, crude oil. So we do expect to see a moving of the needle, right, for crude futures tomorrow morning. We got CPI, we got retail sales, and of course, we look forward to opening up our trade room tomorrow morning at 8 o'clock and having the benefit of that news coming out. We get the manufacturing index at 9:45. Yeah, there's the rig count there tomorrow afternoon, but the rig count is it's like any other news event. You know, trust the chart, right? I don't really pay attention to the rig count. I know a lot of people wish it had some sort of impact to it, but it's just too late on a Friday. So get to it early. Get out of there early tomorrow. Again, 8:30 and 9:45, and of course in the London session, right, 3 o'clock, 3:30, and 4 a.m. You got the plan for tomorrow. Really, the key to tomorrow is not giving back the profit that we've made already. You know, not allowing ourselves to think like humans, right? we have a bad habit as human beings, not as traders, right, but as human beings thinking, well, we've made a lot of profit this week, right? We can lose a little bit. No. We don't want to think like that, and we definitely don't want to go digging ourselves into a deeper hole if we happen to not follow the plan this week, right, and not find a way to make some profit with us here off this nightly newsletter. Bottom line, get the plan for tomorrow, follow it tomorrow. Let's keep going here. Now, we've got crude, we got E-mini, we got gold, we've got some euro. But the first thing we want to keep in mind for tomorrow is that this week has been filled with big moves coming off the FOMC announcement. The most important thing, most importantly, this often eventually results in a few days of sideways trading. So the word of the day tomorrow is range, and we want to be keeping an eye out for this possible developing trading ranges that will start to develop middle to late morning tomorrow. Once we see that range develop, we then begin to buy low, sell high, avoid the middle, and focus on failures. We're not seeing a lot of big clues yet for the ranges, but typically what's going to happen is middle to late morning tomorrow, you're going to start seeing this market not able to make new lows, not able to make new highs, double tops, double bottoms, triangles. And once we see that stuff start to happen, we want to switch from trend following mode, right, to buy low, sell high, avoid the middle, focus on failures, right? Again, a lot of times what happens on Friday, we've got a lot of volatility all week, right, because of the Fed. And of course, that volatility, people, of course, are trading carefully, and it's going to take more to get people to take big commitments tomorrow. So watch out for those trading ranges. I want to make sure we talk about that first. Second, crude oil is bullish. Bullish in the long term, but bearish in the short term, trading inside a bull flag, which is basically a bear channel coming off today's highs, right? Multiple days of very, very strong bull markets, right? Means we're long term, right? We're long term bullish. But in the short term right now on crude oil, this is, as you can see here, we're struggling to make new highs right now. We've got that bear channel coming off the highs. I call it a bull flag, right? And a bull flag tells the sellers to sell off the highs and buyers to buy off the lows, focusing on traps and failures tomorrow. Buyers will be looking for buying opportunities at the low of the channel and want to avoid buying into the high of the channel until buyers can get a successful breakout pullback on the way up to new highs. Sellers, who definitely have the edge, will be looking for opportunities to sell the high of the channel using buyer failures or a strong break lower that can hold below the measured move for a target going back to today's lows. I'll tell you, these are always, at least in my opinion, always one of the most challenging environments to trade, and that is a flag. Flags basically tell me that we've got the spike up, and then of course with that spike up, we start making lower highs, right, and lower lows, and we have a flag. Now, let's play both sides of this coin right now. The buyers are looking to buy the low of that channel, which is very counterintuitive, right? For most of which we see channels, of course, bull channels, spike in ranges. Buying the low of a bear channel, this doesn't feel very easy, right? It's pretty counterintuitive. That's one of the reasons why it makes it so difficult. The next reason why it's challenging is because what we need to get at the highs is usually what happens at the highs, again, we're talking about buyers right now, usually what happens at the highs is it kind of stumbles around a little bit and then it just punches, right? And it just kind of takes out all the sellers and run. What you want to be aware of is the sellers are going to be looking to fade that move back down. As a buyer, you really want to stay patient to start seeing that move, right, that really breaks and runs. That's the one you want to be in on, because on the sell side now, this is where the sellers want to see this thing pretty much collapse here, right? The sellers now are looking for buyer failure, right, to sell back down. That's the easy one, right, in a bear market. And then where the sellers really need to see is they need to see it break down as we go lower. What's going to happen is that buyers, of course, are going to try to buy the low of that channel, and you're going to start to see it struggle and struggle and struggle, and then it will collapse, and its collapse will be trying to get back down to the beginning of that spike. So if you're a seller, you want to be looking for this thing, right? Again, after it kind of starts to collapse there, that's going to be, right, your trigger there. Looking for the sell. So sellers want to sell the high, buyers want to buy the low. right? And of course, when it breaks out, what typically happens when these flags fail is they kind of struggle at those lows, and then all of a sudden, bam, right? We kind of see the buyers give up on it. Buyers try twice, right? And we fail back down to those lows. So to make a long story short, right, it's a lot of counterintuitive trading opportunities here. Buy low, sell high. Right now, the edge is definitely on the side of the sellers. And as you can see here now, we're digging our way into the low of that channel. This is where the buyers are going to be looking. And again, the buyers definitely don't have the edge right now. So if you want to talk about, let's talk about sellers first. So as this thing goes here, obviously the sellers would love to get this price back to that high, right, and then sell it back down. That would obviously be the most attractive, right, and also the most reliable trading opportunity. What may happen though, after seeing this thing just now as the electronic session opens up again, seeing such strength here to the downside right now, we may not get all the way back to the high of that channel. So sellers then will be looking for a pullback, get above, right, and then trap high, and then failure back down, right? Think of this as now, right, buyers will try to buy above that moving average, trap above the moving average, and failure right back down. So ideal situation right now is sellers have a chance here to sell the high, right? That's one scenario. Next one would be a pullback here, of course, right? Show a strong signal bar off of the moving average, right? And then, of course, what I think is going to be most likely here would be a trap, right? And then back down tomorrow, just because you're going to get a lot of sellers that won't want to sell into the low of that channel. And so with that will come lack of selling pressure that will allow the price to get back above that moving average. Buyers, of course, are going to struggle at that point because of the overall bearishness of this move, and will look for it to go back down. Now, there may be another option. In my opinion, really the line in the sand right now is this area right here. We have a naked reversal line, an untouched reversal line. We get a measured move coming off that high. This is really the area. This is the area. So if we see this thing keep collapsing now, break down, pull back, and go, really that's my line in the sand right there. I want to stay below that measured move, right, and below the reversal line there at 45, right, 88. What I don't want to do here is get this thing to try to go a little bit lower, not quite get there, right, and then try to sell into this support area. That's not going to be as reliable as I want it, because then, right, it's more likely to fail and at least spike back up right to the upside. What if you're a buyer right now? If you're a buyer, you don't have control of this market, which means rather than simply looking for a seller failure to be a buyer here, right, you want to see this thing start to make its way back up here. And again, this is going to be a little bit tough here because it has to get and hold that pullback on the way back up here. Seller failure is not going to be very reliable. You really got to get that price to jump here and then find a way to hold that pullback without buying into that high. So assuming now the moving average comes down, right? Sellers are going to try, right? Assuming they fail. Remember, there's got to be a lot of buyers in this market that haven't got a deep pullback all week. We've had 3.5 days now of just strong trends, right? 2 days of trends, 1 day of a spike in range. It's been a market that hasn't had a deep pullback yet. So we may see this pullback into this area here start to bubble up here now with some long-term buyers, and we may see it jump off of that low. What I want you to remember though is that looking for a seller failure here is going to be a lot lower reliability just because of the strength of this move going lower. So what I'd rather see you do tomorrow is wait for that jump, right? Wait for that jump and then look on the way right back up. Be aware though, you've got that falling resistance trend line here overhead. And if it does happen to keep going, we want to see some real strength getting through that area here, holding that pullback. It's really going to have to hold above that channel high, right, for a target up to that 46.52. And then probably not the case tomorrow, but if you look a little bit higher here, we got the prior week high at 47.12. Earlier this week, it looked like those bulls may have had a chance here to completely take back all of the end of last week's trouble and run this back up to that prior week high. So if we can get that breakout pullback to hold here, right? Then we should be good to at least start trying at that 47.12. Again, at this point, it's a pipe dream for the buyers. And again, I will be keeping an eye out for a trading range. For all we know, this might be the workings now.